Hey there, folks. Greg Shepard here, S&A Financial Services. For those of you that don't know me, I specialize in helping folks just like yourself, assuming you're in higher education, basically get the most out of that higher ed retirement plan, been doing so for 20 years. Now, a lot of my videos in the last few months have evolved around TIAA, TIAA that is, they like to be called TIAA, specifically around TIAA Traditional. It can get confusing for those of you that have gotten into the weeds with TIAA Traditional. You know exactly what I'm talking about. So if you get confused on this topic or any other topic that you come across watching my videos or listening to my podcast, by all means, contact me. Folks do it all the time. I welcome, I'm learning a lot, even though I've been doing this for 20 years. Some of the things you folks out there have passed along to me, I've learned as well. So there's a lot to learn and know when it comes to TIAA, specifically traditional. Now, this video is really no exception. I've been asked, I thought it was a good enough question to bring it to your all's attention, because maybe, again, let me preface this. These videos are not necessarily to tell you what to do. It's to get you thinking, get those juices flowing. Maybe it'll bring to light a strategy that you haven't thought about. Again, we're looking to do what's in the best interest of you, which means maybe not in the best interest of TIAAs, right? Okay, let's keep that in mind. Now, with that being said, there's really two questions here. Of course, they're related, so let's see how much time it takes, and I'll try to get to both of them. So this specific person asked, who's now a client, asked me, can she, so let's back up a little bit. So she has TI Traditional, and she has quite a bit in non-TI Traditional. We'll call it the CREF side. So we have TI Traditional and CREF. So her question is, she's been dumping money into TI Traditional for decades. Prior to her, what I call turning on that spigot, but basically selecting that lifetime income annuity option, and there's different options. Right before she selects that, can she dump X amount of dollars, quite a bit, on the CREF side into the TI Traditional, and then turn on that spigot of the lifetime income annuity option? The answer is yes. So she thought, and this other person actually that asked the same question thought there might be some sort of waiting period, from payroll deduction or whatever the case is, but there's not. You can do it at any point. Now, she didn't ask this question, but I informed her, and I'll inform you, that it's in my career, in my experience, I've noticed, and this isn't, I can't tell you this to be 100% factual all the time. I'm just telling you my experience, that the legacy interest buckets, okay, fancy word for saying old money, right? So your old money in TI Traditional, typically, once you convert it into that lifetime payment, typically pays a higher rate than just new money dumping in, okay, for various reasons I won't get into right now. So keep that in mind. It may not be the same new money and old money, but of course they can tell you what that rate would be going forward. There's some other factors that go into play as well. But the answer is yes, you can dump CREF money into TI Traditional right before you select that option if it's in your best interest. Second question that's kind of related, well, it is related. Do the payments differ depending upon the type of contract that I have? So again, if you've dealt with TIA, your career, most of you out there will know what I'm talking about. You may have 6, 7 different contracts. GSRA, RA, RC, I can go down the list, but most of you out there know what I'm talking about. If you don't, make sure you educate yourself on the different kinds of contracts. But the calculation to determine that fixed payment does not differ between contracts. And I'll give you an example, but and I wrote this down here. Although the minimum, okay, the minimum guarantee lifetime income annuity payment amount can differ depending upon the contract. Okay, so the minimum can differ among the contracts, but the calculation to get that fixed payment does not. When we talk about that minimum payment, that guarantee, that's opening up a whole can of worms I don't want to get into right now. Okay, so contact me. It's almost too difficult to get into in these videos I've found. It's easier to converse one-on-one. Email doesn't even do it. It's easier to talk one-on-one when it comes to that. Or call TIA, of course. They're more than knowledgeable on this subject, so they can help you out as well. So the example, and let's also preface this that we have to assume, right? We have to throw common sense in there that the dollar amount. So let me get into the example here. So if you have $25,000 in a legacy contract, a legacy interest bucket, old money, folks, old money, December 2011 bucket, as they call it, okay? And you convert it to lifetime income annuity benefit, fixed payment in an RA, okay, retirement annuity contract. And you have a GSRA, same amount of money, same annuity option selected. It's going to be the same payment, okay? Now, I stress the fact that they're not going to differ, assuming the fact that you have the same dollar amount, okay, let's inject some common sense, same dollar amount and the same income benefit option selected. Obviously, you can't choose two different options to get the same payment. They have to be the same option that you chose. Okay, I just want to make sure everyone understands that. There's a disclosure here, though, that TIAA, at their discretion, can change things. As it states here verbatim, let me just read this. Note that our being TIAA, policy on these matters can change at TIAA's discretion, and it's possible in the future that the amount of lifetime income in excess of the minimum amount may differ between contracts. Okay, I'll just leave it at that. Folks, when you're dealing with this kind of stuff, make sure you know what you're getting into. I harp on this. You know the old adage, don't know what you don't know. Make sure you ask questions. Make sure you understand what you're getting into prior to pulling on that trigger and pulling the trigger and turning on those lifetime income annuity benefit options. Make sure it's in your best interest to do so. If you need me to help you out or just want some, bounce some ideas off someone else like me that's been doing this for 20 years, let me know. Again, contact information is below, and just shoot me an email or give me a phone call. All right, folks, hope this helps out a little bit. Greg Shepard here, S&A Financial Services. Go out and have a good one. Take care. Bye-bye.